All right, guys, Sam with you here midday on a Friday, March 2nd. Last coin of the day. This is by request. This is STRAT to Bitcoin. Now, I've got this, I've sort of pulled out here just to give it some context so you can see this. STRAT to Bitcoin on Bittrex. This is a 4-hour chart, so you can see where we've been, where we've come down to, and this is the, again, similar pattern that we're seeing across so much of the alt space is these long, we'd say 2-3 month bear markets that we've been in, and this was kind of a disappointing trade here, which I'll show you. We took just recently, got stopped out. So if I move this off here, and then let's see if I open it up. Didn't want to do it that open. Let's try again. So let's get. Here's what we want. There we go. Okay, there we got it. Okay, so we had, it's kind of a spiky, but a 5-wave to top out here. And you see the trade that we took, right? Had all the ingredients that we look for, and this is just a reminder to show you that stops are a part of trading. So you can't be afraid of the market. You got to get in there, take the trade that it sets up. There's just sometimes they're just not going to go for whatever reason. That didn't trade. This was all here. So we had the A wave. We came right to the golden pocket. We tapped the median line. I mean, it's just as pretty as it could have been. We got off to a good start. We took the entry here on the first retracement down to the 618. Looked like we were off to a good start. There was the opportunity to tighten the stop, reduce the risk, but it rolls over and we got stopped out here just a couple of days ago. So that's unfortunate. It's too bad, but that doesn't kill the upside. It just means we have more complexity in this correction. But that was pretty. Sometimes you kind of rooting for certain trades to make it, but that one didn't. So we can pull this off now because that's pretty much out of play now as we've moved off and moved away from it. So we'll put potentially. Is this a deep second going in here? Well, maybe let's take a look here. So it's gotten a little bit trickier here to get a count on this because of the complexity. So do we have an, you can certainly make a case that that's an ABC into an A. There's a 3-wave B. So, is this a 4-5? So let's go down to the hourly. Let's see if we can make a case for that. Well, as I would often suggest, the first thing you want to do is look for the 3s. That will help you define, as I've said many times. We trend in 5s, we correct in 3s. So looking here, so we can certainly see this. So here we can certainly see an ABC here. Now, if we're going to kind of reverse engineer this and work backwards, we've got to look for that doesn't look great here. So it's possible we have a diagonal here because this looks more to me like we've got an ABC in this fashion, like this was an A wave. Let me come here. Like we've got, it's a little tougher to get. I think what you may have here is an A wave, a B wave, and we're going down into the C wave here. So we'd have this playing here as an ABC, and then we finish in another ABC. Possible. So we can see this. So this would have to go up a degree. So we'll take that to change the color. We'll go up to. We'll go to intermediate just so you can see it. Okay, could that work? Well, we know now we can take this off. We know we're through the 65. The 786 is down there, but potentially here. So I would start pulling from major pivots. We can put this on. So it just makes it a little easier to grab those swings. So I'd pull from that pivot to that low, have a look-see. Okay, well, sorry. Excuse me, I apologize. Here we go. So there, ABC, so there's the 38, not ideal. So are they working from that pivot? Now that starts to get more interesting. So, that's a contender there, for whatever reason. So if they're using that, it's because it hit the first one. So we get potentially you have the front run here. So that could be why they're using that. So we look here, if we look into that and we go, okay, so if they worked off of that first move down, well, here's the front run at the 50. So that looks like what they did. Okay, so this is what algorithms will do. They'll just follow these like stair steps. Come here. So we come down, we get a pivot low. We come up to the 50. This is a common front run on the 50. We come down, they get their target here. Right, do you see that? So here's the 50, there's the negative 23, we get the reaction. Now we do get through it, but what that would imply is that what they will do is they'll work to the next swing low. So we'll go here. So that would be our swing. So we essentially go straight down. So then we look here. So let me bring this up. So I'm getting a little too much here. So now we look straight down. Up, is it another front run? Well, you can see they did it again, right? So they front run here on the 50. Definitely a front run. Here's their target. We get to and through. So we can pull some of this off. So you can see you can just track their, it's like I said, algos leave tracks. So we can track what they're doing. So you have to check all of them. So you got to look here and say, oh, okay, well that looks like that's pretty good here. So they've taken that. For whatever reason, there's a series of algos that are staying with that pivot. We've come back to the 50, and that looks like we've gone down, and there's their target here. So it's always a process of trying to figure out what they're doing, but that would be a bit of a tell to me, if I can get that right on there. So that's a tell to the 50. What do? They sell it, and we just go almost damn near straight down to get to their target here. Is that the front run on it? Could be. Certainly sets up as a contender for that to be a front run on that. Change that color. So now if we pull out, does that make sense? Could that certainly does, right? So here's the swing low up to the 50, down to the target. So you've got a contender there. You might be able to make this case here that you have a 1, 2, 3, 4, 5. That's another way we could look at it. So if we dig in on that one, we have to check that. And this is just, guys, it ain't glamorous. This is the work you got to do. It can be very profitable, but it ain't glamorous. So you're just digging through these pivots. What do we get here? There's the 1 to the 2. 38, that's a little shallow. Little shallow for the 2, but there it is, right? So we know 12% of the time that 2 will only go to the 38. We come down, here's the algo. Here's the first algo target. They go to the tick to the second algo target. That's the negative 618. So that kind of gets my attention. Then I would look here, 2 to the 4. So we go to the proposed 3 low. Well, there's the 38. So again, all lining up as a candidate here for this to be just a front run on this little cluster of algo targets down here, which is often what they will do. They'll just front run the targets, and we're getting a little reaction. So is that enough to say lows in? No, certainly not. Not yet. Not yet, but it's a contender. Contender for a low. We're making the assumption that they've just front run that. So we have this zone down here that is so you could look at that and say, okay, well, I've got kind of a good baseline down here where even if we do come back down here and challenge that as to test the low, you've got a base here that we can look at and say, well, it's certainly a technical area, and we've certainly come down long enough. You could make the case that Strat is on sale. Hard to argue with that, considering where we've gone. You've got good evidence of algorithmic activity in here. Even if we check all the way back, that would get us to the 38. That deepens it a little bit, but not by much, right? You note the difference here. It's not a lot. It's not a lot, but it's there. So we deepen that a little bit. So you have a zone down here that we can consider if we open it up all the way and say, okay, that's my baseline. So if this is going to serve as our pivot and we're going to move away from it, well, we've got to move away from that in a 5-way. Let me say it that way, because we could always have a leading diagonal. I catch myself doing that all the time. So you could have a 1, 2. We could have the start of something underway here. So we get this little baseline here. Is that enough? Well, it's hard to call that a 1, 2, 3. I mean, it's potentially, it's kind of an ugly one. You'd have to get down to you got to go down to the 15-minute, which I don't really like to do. But does that look like a 1? It looks like lack of conviction. It just that little choppy there. It's hard to pull a 1 out of that. I mean, sometimes you're trying to talk yourself into it. I would tell you to be careful of that. And if we look at that, so you might, I don't love that here. So I would want this to shape itself a little bit more before I was overly aggressive here. If you want to take just a nibble at it down here, you know, that's not an unreasonable area to be looking to be a buyer down here. But I wouldn't give this too much room below these algo targets here. Why? Why ride it down? You know, if it's going to come back down and we're going to continue to move lower, why ride it down? Why take the drawdown? It's just no reason to do it. Now, where this looks a little bit better is if we can get some sort of 5-wave. If we can get the 3, 4, 5, well, then you can make the case that you have a good 1 in, and we're just not there. But you know, you got the potential for this to start to move out of here. Like that. That's what you're looking for. If I change the color, that's what you're after. Can we get enough shape here into a 5-wave, whether it's, you know, it could be a diagonal, whether we get a diagonal or an impulse. Can we get a 5-wave? And if we can, then the next trade is right here on the 2. That's the safer way to approach it because you've got a clear, very clear spot where you know you're wrong. Right? So if we go from here and we take out this low and you put it down here, so you could say I'm a buyer at the 50 looking for that sweet spot between the 50 and the 618. And again, I'm hypothetical here, but if we come up here, we come down. Well, here's the 100%. Here we see, I can doing this so long I can almost do it by eye, just eyeball it. So there's the 1618. So if you come down here, you know, that would be a reasonable target. So if I look at this in terms of your entry and your potential reward, right? So if we put it that way, how much you look at it that way? So you could say, okay, well, just visually, I can look at that and go, I'm going to enter here. My potential risk would be down here to below this low. My upside target, the highest probability zone for that third is here. So I'm going to take this off because that just not to confuse. So that's the risk reward you're looking at. So sometimes visually that's just a better way to do it. It looks like that's going to be almost 4 to 1. Looks like maybe 3.5 to 1. So that's a very reasonable trade. And if you catch that, then you're anticipating the 4. So do you want to ride the 4? You want to ride the drawdown, or do you want to take profit here? Yeah, again, of course, assuming we get there and that you don't just get stopped out. But if it rides up and we hit this, well, that's giving you more confidence. So now you start to work backwards and you go, well, hey, you know, potentially here, I've got a good low here. I've come off of this. I've got a 2, 3. Well, that would add my conviction. That would add to conviction in taking that trade for the 4, 5. But, you know, clearly we're going to have to deal with the resistance on the way up because look, we can just track the algos. They've been selling all the way. So we're going to hit resistance at the 50. We're going to hit resistance at the 618. Can we get on the other side of that? Well, remember, it's waves within waves within waves. So if this comes up here, if we're going to go back all the way back up, you know, so you look and you go, well, you know, why screw around with this? Because look where we're potentially going. If this is a 1, 2. Our 3 is way, way up here, way up here. So you put it in that context, and then you come down here, and so, you know, sometimes you lose that. Trying to dig around in here, and you go, oh man, I'm just trying to get this little pop in here to get positioned in what may be. So you're trying to get into the third wave of the first wave. So because if that completes. Right, so just so you know what this is supposed to look like. If that completes up here, let's say we run into resistance at the 618, which would be, you know, a very common place to run into it. Then we're trying to do this. Let's change the color. Right, so let me pull out. Do you see what we're doing there? You're just trying to get the wave structure to line up. Could that make sense? Is that a potential roadmap? Right, so 3, 4, 5. Right, you know, that's idealized and totally hypothetical. Well, could that be the 1, 2? Could this be the third wave of the third wave? Right? We know that that's, if I got to pull it all over here, you know, or could that end up being the 1 wave of the third? Are we going much higher? I mean, you just don't know. So you just look at it and go, okay, well, this. We're trying to put a roadmap together in here so we can get. We're just trying to get into the 1 wave. We're trying to pick the 2 low. If you're a buyer down here and you're working off of that pivot, you're trying to get the 2 low off of this 1 high. And you're just trying to get into the 1 wave. Now, you've got a lot of choices here because you're trying to get the third of the one. You can wait for the one to complete of the third. Here in blue, you can wait for that to complete. Now you've got all sorts of confirmation that you're moving out of this and you're starting potentially an impulsive move. All that potential lines up. It's just waves within waves within waves, as it always is, right? You know, that's the idealized way to get out of this. There will be twists and turns and things that will, you know, make you doubt and wonder and question. And that's just trading. Welcome to it. You know, you got to embrace the uncertainty. You can't resist it. You can't fight it. You can't look for certainty in the market. That's a fool's errand. There is no certainty. There is only probability. That's all you get in any speculation. You want to be a gambler? Well, you put your money on the table knowing the odds are against you. You want to be a speculator? You look for those opportunities where you, at least historical precedent sets up as so you have something to base off of. So I know that there's a very high probability that if this is going to move impulsively, that this is a likely candidate for a topping point for the third. That's all you know. No certainty, just probability. That's all you get. And then risk reward. Can I set myself into a position where there's enough reward to offset the risk? Right? If you're visual and you like it that way, well, that's a good way to look at it. Risking this to make that. If I come here, well, you know, then it's the same kind of thing. Exactly the same. So if I'm entering here, how much am I going to risk there? You know, we don't want that to go too far. You don't need to risk that much. So you might risk it to the other side of 65. If we overlap the one, you could say, oh, I'm not willing to take the overlap of the one. Maybe we go into a diagonal. So you got to allow for a little bit more there. Where's the target? Right? So we look here and go, okay, does that make sense from a risk reward scenario? I'm risking this to make that. If that completes the one, then I'm looking for the two. I'm anticipating it to come down. Not going, oh, keep going. That rarely happens, right? See, crypto traders got a distortion of reality in 2017 when Bitcoin just went parabolic. It just up. You know, the reality of trading over time. You know, that was, you know, whether it's unique or not, that was certainly not the norm, right? What we're fighting through in the alts is much more like the norm. You know, I mean, a lot of losers. You know, you got to keep the losers small. While this thing is, while all of the entire, damn near all of the alt space has just been drifting lower. While we wait for more clarity from Bitcoin, the entire alt space just drifting. So ABCs of turning into WXYs. Very hard to pick the bottom. So one. You know, there's two ways to look at it. So you could say, well, you know, everything's on sale. So I go to those strong projects that I like that have the good stats that you know, are encouraging to me, like this. You know, great numbers. I can go to those kind of trades, and just buy them because they're low. They're on sale. You know, if you want to be a swing trader, you let the market show itself, and look for these opportunities where you can get in the market with a small amount of risk, so that if you get stopped out 3, 4, 5, 6 times, yes, you're taking drawdown, right? There's no way around it. You know, these are they can't be body blows. You can't do something like that. Take the jab, don't take the uppercut to the jaw. That you'll survive these. You'll survive those because eventually you'll get that. And that's the get well. You get well here on all those little losers, and then every now and then you're going to get one that's just going to explode, and now you're beyond get well. But you know, you can't go in with that expectation. That's the exception, not the rule. You got to trade these swings. You do what you want, but I would tell you that this is a smarter way to do it, right? So I would encourage you to consider approaching it this way. You know, that's meaty right there. These, get used to them. They're going to happen to you all the time. I don't care what you're trading or who you are. You're going to get stopped out way more than you don't, unless you're just a buy and hold guy, which, you know, people have gotten away with in crypto. You won't always get away with that. I would discourage people from making that their investing style. I buy it, I like it, and I just hold till the, you know, it either goes to zero or I'm you know, shopping for Lambos. You know, that's not the way to become a trader. You know, sooner or later, one of them won't come back, or two of them, or three of them, or 10 of them. You know, what do we got? God, we can't even keep. I don't even know what the number of alts we have now is. It's 2,500, 3,000. There's so many now. You really think all 3,000 of them are going to survive? I don't. You know, it's law of the jungle. The strong will survive. Those projects that are solving a problem, that have good teams, that, you know, that there's got to be a reason for them to survive, not just to make money. Competitive market, right? It's a lot of contenders, So, you know, think about how you want to approach it. That's what I'm saying. All right, just final plug of the day. You know, we have just launched this new website, so you can go over to tradedevils.com if you're interested in what we do in the group format or our private Discord, where this very dynamic exchange of ideas and information and trades. If you're interested in one-on-one coaching, that's something that we're offering as well. We would, you know, it's kind of done in a webinar format or a screen share format. So if you want to really dig into this, you know, we're making it available to you. All right, guys, I'll wrap it there.